Hey everyone, Coach Investor back on our earnings video for today, and it's the big one. It's Nvidia. Was there any doubt? No, but it still is very impressive to look at. So Nvidia beat on their own guidance, and yes, again, they raised guidance for next quarter. Now, what is funny is that my prediction was very close to the outcome. Earlier today, I wrote on X expectations $11 billion in revenue, 68.6% gross margin, and EPS of $2.09. I expect a beat and a raise. Q2 revenue of $12 billion, I was actually conservative. And Q3 revenue of $15 billion, I was again conservative. And then fiscal year 2024 revenue of $50 billion, and I think I'll be spot on that. And free cash flow to double, which is exactly what happened. So pat on my own shoulder here. Jumping straight into the comments here by Jensen Huang. So a new computing era has begun. Companies worldwide are transitioning from general purpose to accelerated computing and generative AI. Not just companies, as we've spoken about in the last video, Saudi Arabia and the UAE as well. Nvidia's GPUs connected by our Mellanox networking and switch technologies and running our CUDA AI software stack make up the computing infrastructure of generative AI. During the quarter, major cloud service providers announced massive Nvidia H100 AI infrastructures, leading enterprise IT system and software providers announced partnerships to bring Nvidia's AI to every industry. The race is on to adopt generative AI, and of course the results speak for themselves. So here are the results. Revenue $13.5 billion, up 88% quarter over quarter and up 101% year over year. I mean, it's truly remarkable, especially at the scale of Nvidia, to see these kinds of numbers. I mean, incredible. Gross margin 71.2%, that's up 4.4 percentage points quarter over quarter and 25.3 percentage points year over year. Operating expenses increased only 5% quarter over quarter and year over year. Operating income, net income diluted per share, I mean, more than doubled, and well, as you can see here, year over year, over 400% growth year over year for all three of them. It's when you see those numbers, you really have to refresh the page a couple of times to see if it wasn't a typo, because I mean, wow, just wow. Then as for the different segments, not surprising here, compute and networking, that's $10.4 billion, up 133% year over year and 166% quarter over quarter. As for graphics, did increase 14% quarter over quarter and 11% year over year. Now, if you look at the different segments here, the majority of the revenue, the additional revenue, right, the huge guidance beat is obviously because of data center, and the $16 billion for next quarter will probably be another huge increase here in the data center side. So that's up 141% quarter over quarter, 171% year over year. As for the gaming aspect, we can see small improvement there, 11% quarter over quarter, 22% year over year. As for professional visualization, we are up quarter over quarter, but still down year over year, 24% there. Automotive slowed down, so that's down 15% quarter over quarter, but up 15% year over year. So as a whole, we've seen $13.5 billion. It's crazy. And we continue here with cash flow from operating activities, $6.35 billion. That's up from just $1.27 billion a year ago and just under $3 billion a quarter ago. Both increased driven by higher revenue, and I believe free cash flow was $6 billion or so. Now, they do say here something interesting because, well, the stock price is pretty expensive, but hey, we have a new share buyback program for up to $25 billion without expiration. We plan to continue share repurchases this fiscal year. Now, during this quarter, they returned $3.38 billion to shareholders in form of 7.5 million shares repurchased for $3.28 billion and cash dividends. Dividends here, really not that much. As of the end of the second quarter, we had $3.95 billion remaining under their share repurchase authorization. And now, as for outlook, they expect revenue to be $16 billion plus minus 2%, GAAP and non-GAAP gross margin 71.5% and 72.5% respectively. And if you want to look at the quarterly trends, as we always do, you can clearly see the path here. Data center takes over the whole business. Remember, it wasn't that long ago, 2 years or so, where gaming, you can actually see it here, right? Q3 fiscal year 2022, gaming was $3.22 billion, while data center $2.93. Where are we now? Well, data center $10.32 billion and gaming 2.48. So gaming decreased since then, and well, data center increased threefold, a bit more actually. Now, where do we go from here? So currently the expectations for this year, for their fiscal year 2024, is $44.19 billion in revenue. I think it's closer to $50 billion. Then for fiscal year 2025, closer to 60. I think this will be revised up again. And then fiscal year 2026, $72.8 billion. If you look at EPS, you can see here, of course, increased growth. So for this year, $8.18, next year close to $12, and fiscal year 2026, $16.2, and that's fiscal year 2026 because they are ending the last quarter already in 2024. So you see increased growth here at the top and bottom line, and this is the magic of Nvidia, right? Started off hardware, but it's been a long time that they've been talking about building software. They sell you the hardware, but at the same time, they sell you the software as well. We've talked about Omniverse. I mean, Omniverse is a very exciting part of the business. I've talked about this when it was announced. Very excited about that. I mean, you see it, right? They sell you the hardware, whether it's GPUs, for data center, in the cars, you name it. And then they can sell you software as well, which is why you see those high margins for Nvidia that you don't really see with many of the other players. And just for the fun, currently the average price target for analysts sits at $530. Of course, expect a lot of upgrades tomorrow. So that will be it for this video. I mean, what more can we add, right? Incredible execution, but we saw it coming. So this is not really a surprise. Wow, they beat and raised. No, this is, wow, they beat and raised, and look at those numbers. Truly remarkable. Now, let's see what the stock will do in the coming months, because of course, the stock has gone up fivefold tomorrow. In the next couple of days, probably going to be extremely green. Since the lows, it's gone up fivefold. So there was an extremely big expectation for this company to generate a significant amount of money, right? After last quarter's beat and extremely big raise, the stock jumped even more. So the expectations are there, but in this case, the executions are there as well. And I know some people will say, oh, but you did say you're not buying and you should be selling. I never said you should be selling. I said taking profits is not a sin. And if I would be given your money, I would not be buying Nvidia at these levels. Why is that? Because I do think it's still very expensive. The stock price is still high. That said, it's still a great company. But if you're looking for more upside, there are better options out there with better valuation. That's all I said. And by the way, in my second smaller portfolio, I do own Nvidia. My family does own Nvidia, actually second largest position in my father's portfolio. So yeah, and he has to thank me for that as well. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.